Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, back on the podcast, we have Rohit Srivastava. He's the Chief Investment Officer and Portfolio Manager with Saroj and Bhanu Fund. We're going to dive into what's going to happen next week in the cannabis industry with our predictive analytics. We've got some technical analysis to talk to you about this week. So with all of that said, this is for entertainment purposes only. Rohit, take it away.
Thanks, Josh. We are back again, 11-1. I'm giving an update on 11-1. So first of all, the disclaimer is the same thing, reiterating this is for entertainment and learning perspective. There is no professional or financial advice we're giving here. This is the index we have been talking for a couple of weeks now. Equally weighted means like you put $1 in each of these indexes, and that's what we have built the index at this point, and we might change it if, as we are learning more about it. This was about 2 months ago. This was last week, and this week we are hanging in there on that 475 support. It has stuck to that support, and at this point, where I want to stress a little bit here is that about at the start of this year, this is the range it was just fluctuating, and it reverted back in the start of the year. And at this point, it is trying to revert back at the same point. So my view at this point is that it is a great point that it has reverted back, and it could be considered as a reversal, but we might have to wait till it turns back to 535. That's the view of what the value of the index it is, but from a cash in and outflow, this is what it was about 2 months ago. This was last week, and this is where we are this week. And as you can see that it has crossed the zero line, and it has broke off that pattern or the trend it was trying to create, the downward trend. It has broke that trend, and it is moving. And I would enter into this index right now cautiously. What I really mean is that, like you see here, that it broke here, but it turned back again, broke here, turned back again. So it is a point where you can cautiously get in, and it might be a reversal at this point, but if it not, then it might be a point that you can get back in there. And the date where it actually turned back was 10/30. 10/30 was the date when it actually turned around into a positive cash flow, cash in and outflow.
Before we move on, that previous slide, there was a resistance at $5. And so is it possible to see the support between 475 and 5 and just kind of, if you have a straddle or spread on that, do you kind of see it bouncing between there?
Yes, I could see that in the next, so good point. As I can see that it can bounce between those 2 points till the end of the year, till it actually kicks off the start of the next year. But you're right that the straddle which will try to create between those 2 points can happen, and it's $5.35. That's it is at a $5 value right now, but at $5.35, I can see that bouncing back and forth till the end of this year.
And I'm also seeing a $5 support. You know, when you go back to March 8th, it hit 5 and dropped down significantly. And then before that, there was a couple times it hit 5. And so, I mean, that's only twice. Doesn't necessarily make a trend, but it does bring up a red flag potentially for me when looking at that specific point in time. I guess we'll have to find out.
Sure, that makes sense. Sure. So moving on to this, where that I think it might be a good point on 10/30. That might be the date. Might be a good point to get back in cautiously. And I think it is a very positive sign. It is a very good positive sign that the cannabis index, cannabis stocks might be catching up on some of these. And this is from a long-term point of view. From a short-term point of view, this is where we are. This is where it was like about a month ago. This was last week, where there was tons of buy. There were tons of signals on these, the 5 of these stocks, which was a buy signal. And this week, 5 of those are back to sell. And on 10/29, a lot of these were basically sold on that. Now, some with a negative loss, some with a positive loss, but overall, I think the indicators were false in my view.
Mhm.
And one of the things which I want to point out to our viewers is that, all of these, I added market cap in order to just give you a reference of this point, is that what it is that there are these big ones, big players, which are probably where the higher weightage needs to be of our investments.
So just to clarify, that's ABV, Canopy Growth, and GW Pharma for those listening and not watching.
That's correct. And these are the one with, like, ABV is like 122 billion market cap, CGC 7 billion, and GWPH is like 4.5. And there are a couple of more, Aurora and Arena, and Kronos, who have like really big ones. But these small ones, HEXO, Innovative Industries, Alteria, and all of these, they're great investments. That the suggestions we're giving were great, but it is a very small market cap. It is a small market cap, and trading these small market cap, it can be risky. So just giving you guys a view about that what it is. When we say like 23% of PMD, look at the market cap. It's a $500 million market cap, and does not really mean that if you put $1 billion, you're going to have $1.5 billion.
Unpack that for a second, Rohit. When you say it's a little bit risky, is that because when you have a small market cap of 0.5 billion for HEXO, for example, that with volume it's easy to move those up and down, and whether it's a buy or sell?
That's correct.
Okay, is that why?
That is correct. Yes, it can be easily manipulated. So the amount anybody invest has to be very cautiously have to invest in there. That it does not mean that you go and invest $1 million into HEXO. That's probably the point, exactly your point on that. So and I'll elaborate a little bit more on HEXO for them, but let me point out 5 of the cells. Some of them last week they were doing pretty well. Like the MBII and the Kronos, those were doing pretty well. But this is not like every time. This is actually a good thing that this is not that every time is going to be a positive result. This is not like this is not something which will tell you every time a positive result. So I'm glad that it's giving a little bit of negative result this time, because the canopy growth is about 5% less, but last month, it was last week, it was in a positive direction when we bought it.
This also highlights the importance of trading versus investing. This is an opportunity for an algorithm to pick up these opportunities and ditch them when it's good, keep them when it's good and get rid of them before it's bad, because this can happen fast.
That's correct. This can happen really fast. And like you said, that and a lot of times, some of the times it pays off very well. Like the ABV, you can see that it triggered on 820, and it has hold on to that with a 23% gain. And that's actually a very good example, because the amount of dollars that would have been invested in that would have been pretty huge as compared to any of these other stocks, based on the market value of that organization. So that's part of the thing, is that these are the short-term investors. If anybody is doing the short-term investment on these, the investment has to be based on how much the market can actually handle on a particular stock on this. So coming back to the point that when these 3 stocks which we were talking about, GWPH, CGC, and ABV, these are the 3 of them will have the major values in this particular index. And these small ones, probably they are very small in market cap. They might do pretty well in overall, but it doesn't really overall gives them index value to a particular point. So let me focus a little bit on HEXO. This is based on AI-based analysis, and it does it has some of the RSI or MACDs incorporated in this particular thing. So, but the fact about this, let me give a few facts about it. $535 million market cap and a negative 5 cents of EPS TTM on that. And this is the SB action value, like you can think of an accumulated value of the stock, which includes different predictive analytics, and it also includes a lot of technical indicators like MACD and stochastics, moving average values. It is basically an index which my algorithm uses to identify if it's a buy or it's a sell. So anytime and the orange line is the daily close value. Anytime the price of the close value is above the daily action SB action value, that's the point to buy. So this particular stock has been for like this is year to date graph, and you can see like there are these. This was the buying point. This was the selling point. This was the buying point. This was the selling point. And there were a couple of what I call like a false indicator, where like you were just mentioning that, you know what, as soon as it falls, you might want to just get out of it. These are the particular thing, and accumulatively, they probably, in this particular case, they have netted in a positive direction with a 1% gain. But you can see that if we choose this one, and this would have been a 10% gain, this would have been about 6.5% gain, and overall, and at this point where we are right now is from, I want to stress a little bit here, is that it has been going through a bad patch right from the middle of April. And you're more technical, you're a more fundamental expert, and you might know what's happening. I just know a little bit that during this point where Bank of America started covering it, and something happened here, and you might want to stress a little bit more, after I wrap up, is that at this point is where the SB action value was saying that you shouldn't be getting back in. And it had a pretty bad run all the way up until here, middle of start of August or end of July, and but it was a false indicator, tried again, false indicator, tried again, and it is at a very bad run right now. So there is no indicator of any sort saying that, you know, it is a time to get in. It is the stock is at a point where it is netting out to a very negative value. So overall, if what the SB action value performance would have been about 16%, but with the actual this year, it has been about 39% down. And I put that 100K as the maximum investment value, for just reiterating that, you know what, the market cap is a very important factor, and the 100,000 is the maximum anybody should be investing. If I would be investing, I would be investing anything more than that. Summarizing what we are at is that it is holding the support of 475, and the cash and outflow suggests that it is the buying point cautiously. And the 5 stocks which we added last week, some of them sold off, and that's probably for short-term investors. Overall, I think that the cannabis index or cannabis market is stabilizing and holding on to valuable stocks like the ABV and is probably good if somebody is already in there. And for short-term investors, buying and trading based on these index values would be an awesome thing to do. So, concluding that to you, and maybe Josh, you want to chime in and talk a little bit more about HEXO, what from your perspective, fundamentally, what's happening with that.
All right. Thanks, Rohit. I just wanted to briefly kind of touch on the differences between technical and fundamental analysis. Essentially, technical analysis is to identify trading opportunities in price trends and patterns seen in charts. So some of those tools that can be used as a relative strength indicator or a money flow indicator. We both like the MACD, the moving average of convergence and divergence, as well as Bollinger Bands and candlestick indicators, versus like a fundamental analysis. Essentially, you're just looking at the most basic business or fundamental level of financial health for that business. Some of those tools are earnings per share. We saw HEXO at 5 cents, negative 5 cents. There's price to earnings, price to sales ratios, or price to book ratios. Very different. Fundamentals isn't really that fun. We leave all the emotions out of that trading with this algorithm. And so some of the reason I wanted to point this out is because what you're going to see in the news is different than what our report is doing, because technicals is different than fundamentals. So what you're seeing in the news is a lot of emotions, a lot of issues with just regular cash flow. So reading from this Yahoo Finance article, it talks about a stock cash problem. They announced a $70 million private placement, an unsecured convertible debenture paying an 8% interest rate payable quarterly. If fully converted, the private placement could add about 21 million new shares and dilute 7%, diluting the shareholders. So laying off 200 employees, that's about 24% of their workforce. They announced they're suspending production at the Niagara facility, 200,000 square feet of its main location, and then said the suspension is due to current market conditions in Canada. And they finally delayed their fourth quarter earnings. They were negative. They weren't very good. And then with the layoffs and everything else, there's just a lot of bad news, basically. I mean, I could kind of keep going on and talk about valuations and where we think this is going to go long term. But essentially, just looking at the differences in fundamentals versus technicals and where you're going to see this at, there's opportunities. So as an investor, I wouldn't touch this with your money, but as a trader, I'd play this all day long, because in one day you can match the S&P's average. We saw for a brief week, maybe even a day or two last week, where this was a potential buy opportunity. But if you're not quick, if you're not in and out, you can lose. And we already saw the Fibonacci retracement of 60-something%, which is really, really bad. You don't want to get caught up in that. And so understanding the difference between technicals and fundamentals, trading and investing, is going to be important for all investors. So I want to thank my guest, Rohit Srivastava. He is the Chief Investment Officer and Portfolio Manager with Saroj and Bhanu Fund. I want to appreciate you being back on the podcast with your crystal ball predictions.
Thank you so much for having me.
So this is the Talking Hedge. I'm Josh Kincaid. Don't forget to like, share, and subscribe, or don't, and I'm out.